Asia is buying gold at a pace the world hasn't seen in decades, and the quiet winner is Australia. But behind the shipments, behind the elevated prices, and behind the silent accumulation, there's a much deeper story unfolding. One that explains why this gold rush is happening now, who is driving it, and what it means for the next 10 years of power and money in the Asia-Pacific. Today, we're going to decode it. Welcome to Geo Capitalist, the channel where we study how nations move wealth, strategy, and influence across borders. And today, we're breaking down why Asia is quietly buying up Australia's gold. Before we dive in, make sure you subscribe. Your support helps us keep these breakdowns independent, data-driven, and free of sensationalism. Remember, all visuals in this video are simulations for analysis, not depictions of real operations. Now let's continue. Australia's gold sector is undergoing a moment unlike anything in recent memory. Industry forecasters now estimate more than $60 billion in export earnings for 2025-2026, nearly double what the sector generated a few years ago. And the remarkable part is this. It's not because Australia suddenly discovered new mega deposits or opened a wave of new mines. The surge is coming from demand, overwhelming, sustained, and strategically motivated demand. Whenever the world enters a phase of uncertainty, whether that uncertainty is economic, political, or even technological, investors and governments shift toward assets they can physically hold. Gold becomes the anchor. And unlike oil, gas, or lithium, gold's value doesn't depend on energy grids, supply chains, or manufacturing cycles. It simply exists. In periods of inflation, in moments of currency volatility, in times of geopolitical competition, gold quietly becomes essential again. Australia has emerged as the world's reliable supplier. Not because it's the biggest, China technically produces more, but because Australia is perceived as the safest. Stable institutions, transparent mining practices, and one of the world's most respected refineries, the Perth Mint, give the country a credibility advantage that few nations can match. When central banks want metal they can trust, Australia is the first phone call. And that is the foundation of this surge. When you examine the export data, a clear and unmistakable pattern emerges. Asia, not Europe, not North America, is driving this boom. China alone accounts for billions of dollars in Australian gold imports each year, funneled through both direct shipments and Hong Kong's refining and trading hubs. India, for its part, remains one of the world's largest gold consumers. Its demand is powered not only by tradition, but by financial behavior. In many Indian households, gold is both a savings account and an inheritance vehicle. Singapore has rapidly become a global vault, attracting wealth from across Asia seeking long-term storage in a politically stable jurisdiction. And Hong Kong, despite its challenges, remains one of the most important nodes in the region's gold circulation, acting as the distribution point for traders, banks, and institutional buyers. Why are these flows intensifying? Because Asia's central banks are quietly recalibrating how they store value. Instead of relying solely on government bonds or foreign currency reserves, they are increasing their stores of physical gold, metal that's outside the financial system and immune to digital disruption. Asia's accumulation is deliberate, methodical, and long-term, and Australia is right at the center of it. The real engine behind this gold rush is the shift underway in global financial strategy. Across Asia, policymakers and central banks are hedging against a world that feels less predictable. Supply chains have been tested. Currency markets have been volatile. Energy prices have moved sharply. In response, nations are looking for reserve assets that don't depend on any one government's policy decisions. Gold fits that role perfectly. It's an anchor that doesn't rely on interest rates, can't be digitally altered, and retains value across generations. For China, holding more gold is part of a long strategy to build financial resilience. For India, it's a tool to stabilize the rupee and support long-term household security. For Singapore, it's about maintaining its position as a regional financial safe haven. All of this demand converges on Australia because Australia provides a combination of reliability, ethical standards, and scale that no other major exporter can match. It's not only about gold, it's about trust. And in a volatile world, trust is worth more than almost any commodity. Asia could, in theory, buy gold from dozens of countries, but it chooses Australia because Australia is uniquely predictable. There are no sanctions risks, no political instability, no opaque ownership structures, and no concerns about forced labor or conflict mining. Investors know exactly where Australia's gold comes from, how it's refined, and how it's transported. The Perth Mint plays a massive role in this reputation. It is one of the cleanest, most respected refineries in the global market, and its bars are accepted by every major London and Singapore vault without question. For central banks, this is crucial. They want metal with clear provenance. Shipping also matters. Routes from Western Australia to Singapore, Hong Kong, and India are short, secure, and efficient. When you factor in speed, transparency, and political stability, Australia simply becomes the most convenient and most reliable supplier. And that reliability is now turning into geopolitical leverage. Gold isn't just an investment, it's a strategic asset, and Asia's demand for Australian gold has geopolitical implications stretching far beyond commodity markets. China's steady accumulation strengthens its long-term financial security. India's rising demand supports its push for greater economic autonomy. And Southeast Asia's storage hubs are becoming new centers of influence, competing subtly with traditional Western financial zones. Australia gains something powerful from this dynamic: strategic relevance. Even without saying a word, Australia becomes more valuable to the region. Nations that buy gold from you consistently are nations that depend on your stability. That interdependence creates diplomatic room, soft leverage that doesn't involve military alliances or trade retaliation. It's the quiet kind of influence that compounds year after year. Inside Australia, the impact is significant. Gold revenues are propping up national accounts at a moment when other sectors, including gas and some critical minerals, are navigating price softness and project delays. Mining towns across Western Australia, from Kalgoorlie to Leonora, are seeing renewed exploration activity and new infrastructure investment. Refining capacity is expanding. Equipment orders are rising, state royalties continue to support local budgets. For the national economy, gold has become a stabilizer, a counterweight to fluctuations in energy markets. As Asia buys more, Australia's export income becomes steadier, insulating the country from external shocks. It's not exaggeration to say that gold, once considered a legacy industry compared to lithium or hydrogen, is now one of Australia's most important economic pillars. Looking ahead, three major forces will shape the next phase of Australia's gold story. First, new refining and trading capacity is being explored in both Western Australia and the Northern Territory to meet Asia's growing consumption. Second, Asia is experimenting with digital gold platforms, secure, verified systems that allow institutions to trade ownership of physical metals stored in vaults. Singapore is leading the charge, and Australia is expected to become a key supply partner. Third, India is launching its own bullion exchange, aiming to reduce its reliance on foreign intermediaries. This could tie India even more closely to Australian supply lines. And as for China, its long-term strategy points to continued accumulation. Every time markets tremble, Chinese purchases increase, a pattern unlikely to break. But there is a risk for Australia. Over-reliance on Asian buyers may create vulnerability if demand shifts suddenly. Still, the long-term trend appears durable. Asia is building a multi-decade reserve position, and Australia is positioned to remain its most dependable source. When you take all these threads together, a clear picture emerges. Asia is strengthening its financial foundations using the oldest form of wealth storage humanity has ever known. Australia, through its transparency and stability, has become the region's trusted vault. And as gold moves quietly from west to east, Australia is gaining a form of influence that doesn't involve speeches, sanctions, or military posturing. It involves trust, the most valuable currency in the world. This is why Asia is quietly buying up Australia's gold, and why the next decade will be shaped not by loud announcements, but by silent accumulation. If you found this breakdown valuable, check out our next video, where we explore how nations shift wealth and influence across borders. And don't forget to subscribe. Your support helps us keep these analyses independent and impactful. Now, I want to hear from you. Do you believe Asia's gold strategy will reshape the next 10 years of global finance? Share your thoughts below. Your insights help guide the next episode. Until next time, stay informed and stay ahead with Geo Capitalist. I'll see you in the next one.